Hey there, everybody. Thomas Wood with Basecamp Trading. It is Monday, June 5th, and we're going to continue on with our price action series. And I want to talk about a topic that is not covered all that often, but that's actually really important to trading, and that is knowing when not to trade, knowing when it's a good time to sit on your hands. One mistake a lot of traders make when they first get started in trading is they think, oh goodness, I have this money sitting here, I should be putting it to work, so I need to be in the market. And they try to be always finding a trade, and they're looking for positions. And that can be really detrimental to your trading because you start forcing trades and get to the point where you're taking trades that really are not all that great, and you end up just losing money, and then you start making another mistake, which is, oh goodness, now I'm in the hole. I got to dig myself out of this hole. You try to dig yourself out of the hole instead of just calling it quits, and you lose even more money. One of the things I say is one of the worst possible things that can happen with a trader when they first start trading is they actually lose money, they get themselves in a hole, and they decide to dig their way out of the hole, and they are successful. And the reason I say that's a bad thing to happen to traders when they first start is because then they get this bad habit ingrained that it's not okay to take a loss or have a losing day. And every time they go down, they start trying to dig their way out. And I've seen traders lose literally millions of dollars in a matter of a day or two trying to dig their way out of a hole and just adding to losing trades. So don't make that mistake. But back to the original topic, which is knowing when not to trade. So again, because this is the price action series, I want to talk about a simple way of identifying when a market is not in a good point to be placing trades. One of the things I look for when we first come into the room in the morning is I want to see the pivot highs and pivot lows that happened over the night session, especially in futures contracts or Forex when you're trading through the evening hours or all night long. So if we take the S&P, for example, if you were in the trading room today, you know we sat on our hands all day long. I said, there's nothing we want to do, nothing we want to do. Nothing's interesting to me. And one of the things we were looking at is we looked at the pivot high and the pivot low in the S&P, and we know that if we stay inside of this range, we're going to be a choppy market. And you can see so far the S&P has been chopping all over the place all day long. It's just about 2 o'clock in the afternoon Eastern time, and we're still just moving straight sideways and have been for the past 4 hours. So keep that in mind. Just look at your pivot high and low and see if you're inside of a range. If you're inside of a range, you're obviously not going to have a trending day. If you're not going to have a trending day, that means you're not going to have any big moves, which means either A, we sit on our hands and we don't mess with it while it's in the range, or B, you go down to short-term charts and you look for just short-term scalps. I personally like to take option A and just sit on my hands normally when the market's not setting up for a bigger move, because the bigger moves are where we make the most money. All right, so keep that in mind. That's all I got for you for today, though. Be patient. Don't be forcing trades. Don't feel like you need to be in the market all the time. You don't. Wait for those right opportunities. Wait for the good setup that's a part of your plan. Stick to your rules, and then jump in when it's time to place a trade. Don't force trades just because you think you need to be taking part in the market movement. All right, that's it for today. Don't forget to click that link to subscribe or click that like button if you enjoy these videos. And until next time, happy trading.